Eric Mother, Mother.com, US market analysis for the weekend of December 5th and December 6th, 2015. All right, take a look at the market's close on Friday. Strong session, up 2% across the board on the major averages. Gold was also up about 2%. Crude oil was down 2.4%. For the week, S&P 500 was unchanged. That's unbelievable. Take a look at the gain or loss for the week for the Dow. The Dow was up 0.28%, and the NASDAQ, believe it or not, was almost unchanged. NASDAQ was up 0.29% for the week. So let's take a look at the charts. All right. So after a nice confusing week, what is the conclusion? Now, what I think is going on here is that the weekly charts continue to show markets that are still in trouble. And there's a fight going on between the weekly charts and the daily charts for the most part. And we have to assume for now that the bigger time frame is going to win. All right, let's go to the resistance levels. If you take a look at the NASDAQ, it is still showing the same resistance level that we've been talking about the last couple of months on this line. We haven't moved above that this week. And so until such a time as we can move above that red line, the blue line, then chances are this market struggles. So a breakout is what the bulls want to see. On the other hand, bears would like to see this confirmed as resistance, and the market, after showing resistance, that the market eventually moves lower. So the resistance on the weekly continues to be there. That's one layer. Also come back to the break point on this weekly chart. So we broke here on the RSI, which corresponds with the break coming off the highs of June, July. And so we can draw a line from here, and you can see that this is exactly where the market is showing resistance. So as long as there's resistance on that line, it indicates the markets are going to have to pull back. And if the market is to do well and trade higher beyond this point, it needs to break out above that red line. So for now, because we did end at resistance, we have to conclude that the market is still going to have to prove itself, otherwise it still has a chance of going lower. If we take a look at the daily chart for the Dow, or for the NASDAQ, excuse me, so the NASDAQ had a nice session on Friday, up about 2%. Why? Because it moved its daily RSI above 50, and also we see that it did show support on this line. So let me draw that again. If you take a look at the 1 year daily, or let's take a look at a 6 months daily for the NASDAQ. And on this 6 months daily chart, you can see that it corresponds with a nice support line right there. It doesn't get any clearer than that. Connecting the lows here in August, the lows of late September, lows of mid-November, and now the lows of early December. As long as the market is holding this line or trading above this line, you have to assume that the daily charts are pointing to a market that wants to go higher. And so that's why there's a lot of confusion for now. Also, we can see that if you take the daily closing highs, you can draw a straight line like that. So connecting the daily closing highs over the last 6 months, you can see resistance, and the market came back to the top side of this channel or this trend line. So the bulls would like to clear that resistance so they can press on higher. Bears would like this resistance to be confirmed so that eventually the market can point down. So we have to wait and see whether we're going to see resistance or we're going to see a breakout. But keep in mind that the daily RSI on the NASDAQ is showing a nice line of support. One has to assume that this daily chart is indicating that more than likely prices could easily continue to the upside. Now, of course, on the other hand, if we come back and break this line at some point, so at some point if we break this daily support line, then that's when we are going to know that the market is now setting to go lower. Take a look at the Dow Weekly, and pretty much the same type analysis. We got topside price channel resistance if you connect the weekly closing highs. We got topside RSI resistance, draw it like that, and also resistance on this level here. So the market has to clear those two price and RSI levels. So it needs to be above the trend line on the price and above those two lines on the weekly RSI if the market is to go lower. Otherwise, I think the weekly chart still continues to indicate more than likely that the market is still showing chances of going lower until it can clear the resistance. On the daily for the Dow, we see that the Dow had a huge session on Friday. Why? Because it moved its daily RSI back above 50, as you can see. All right, so that's easy to see. And also we see that the Dow is coming back and showing a nice support. So let me explain this. If you take this line here connecting the previous RSI highs on the daily, once the market broke out here in October, the market has been on a nice move higher. We've been grinding higher. So what we are doing over the last couple of weeks is coming back and testing the blue line and bouncing higher for a nice re-entry there. And over the last 2 days, we hit that level and the market is responding well. So if we use this daily chart by itself, the daily chart is indicating here that the market wants to continue moving higher. So it's very confusing, we have to admit. Also, keep in mind that the market still has to decide what it's going to do with this trend line on the price. Clearly, it needs to break out above that if it's gonna continue higher. Otherwise, if this is confirmed as short-term resistance, we should expect the market to pull back. Let's take a look at the S&P 500. Pretty much the same type of analysis. So let's just spend a second here. You can see weekly resistance. I guess you can do it this way or this way. And we are still showing resistance on the weekly RSI. No surprise. Take a look at the S&P 500 daily. And no surprise, we had a good session on Friday because S&P 500 managed to close above 50 on its daily RSI. Let's take a look at the hourlies here for the SPX. And I believe the hourlies are probably pointing to a pullback hour to hour. If you take a look at this level here, we broke through here. This break was responsible for Thursday's drop. And so what we are doing in essence is coming back to test that break point. So we can, that breakpoint is somewhere there. Let me draw that again. But this time we are looking at a 1 month hourly chart, and I'm using RSI period of 26. So just to be clear, so 1 month hourly RSI period of 26, because I want to show this point. And what we are doing here is we broke down on the RSI here. This break was why the market dropped on Thursday. So we're coming back in essence and testing that level, that break point. So we are testing that break point, and the market as of Friday's close is showing that it came back to test that break, that red line, more than likely indicating that the market could be setting up to begin the week with a pullback. So that's the RSI resistance. You can see this shown in the price. If you take the hourly closing highs and just draw a line like something like that, you can see that we broke down here. We dropped, right? So from this level here, if we draw a line from that break point, you can see at the highs of the day. So let me draw that again. Give me a second here. Bear with me. So there's a trend line there. We broke there. And so what the market is doing was coming back to test that level. So depending on what happens, if this is confirmed as short-term resistance, we should expect to begin the week with a market that is pulling back. If we take a look at the 30-minute chart for the SPX 1 month 26 period on the hourly, draw a straight line connecting the recent highs. You can see that as of Friday's close, the market came back and is tagging that same line. So if we can't move above that blue line, the indication is that we should expect the market to pull back at the beginning of the week. Otherwise, market bulls would like the market to clear that resistance short term so the market can continue adding on to the recent gain. But we close at the resistance line, so let's more than likely conclude here that the market is going to be pulling back as we begin the new week into the second trading week of December 2015, of course. Let's take a look at Apple, and just like the other major market charts we've seen, you can see that if you take the weekly closing highs and draw a straight line, it will be something roughly like that. And so we've been unable to move above this resistance line on the price trend line there. So if the market is to move the stock higher, it needs to clear that line of resistance. We haven't seen that take place. Also on the weekly RSI, if you take the top side, the market has been unable to move above this RSI line of resistance. And of course, market bulls would like this to be clear to the upside. Otherwise, it might be another reason why the market will pull back as far as Apple is concerned. Also, you can take a look at the break point recently. This RSI break right here in July. The market broke down here. We haven't been back to those highs. And so there's a resistance line somewhere around there on the weekly RSI. And over the last 2-3 months, the market has been hitting that line and showing resistance. So until we can clear that red line, I think the indication here is that Apple is still looking like it wants to pull back. We take a look at the hourly, and a couple of observations from the hourly. Take the top side recently, and you can see that as of Friday's close, the market did close at the line there, suggesting that hour to hour the stock is going to have to pull back. So that's one layer of resistance. The other layer of resistance is coming back to test the trend line RSI break point. This break point in November of the highs here. So we can draw a line from there like that. And what we observe is that this has been resistance once before for this high here. And now as of Friday's close, it seems to be stalling close to that line. So net hour to hour, and also on the weekly charts, I think I lean to this conclusion that Apple more than likely is going to have to pull back hour to hour, week to week, until it can clear the resistance levels that we've just discussed. In conclusion, let's just keep in mind that if we take a look at the big picture view on the monthly, as of right now, the NASDAQ is holding above the previous monthly closing high. So the level to watch there is 5,128.28, which is the previous all-time monthly closing high. Anything above that, and the NASDAQ is breaking out, so we have to be aware. A market that is breaking out is a strong market. If we take a look at the Dow is a little bit far away from breaking out, but the level to watch there is 132.70. So if the Dow ever gets back to that 18,132 level and breaking out, we have to respect the potential for upside. S&P 500 has a breakout level that we need to watch, and the breakout level there is 21. So 2107.32. So 2107.32. Anything above that and the market would be breaking out. So let's just keep those numbers in mind, because if the market is breaking out, we have to anticipate a strong bull market. For now, only the NASDAQ is breaking out. Weekly charts are a problem. Let's conclude this, wrap this up. S&P 500 weekly needs to clear this line of resistance, number one. And number two, it needs to clear this resistance band here. And number three, it needs to clear this band of channel resistance if it is going to see higher prices. Eric Muaded, muaded.com. Enjoy your weekend. For subscribers, check out part 2, or check out some ideas from Friday's video. Good luck, peace and blessing. Mwah, 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 mwah. Woo! Yeah! Woo! Woo! Yeah! Mwah.